Good day, this is Daryl, and I'm going to briefly explain this trade setup I've been working on. We're looking at a 4-hour dollar CAD chart here. The MAs you see on there are the 36 and 48 EMAs. They're not really important, it just happens to be what I use. So kind of disregard those numbers as being something you might want to try. You might want to try something different. So, as I said, this is a 4-hour chart, and these lines obviously are 1 week between. So there's 5 times 6 is 30. There's 34-hour candles in here. And some of the basics here are there's no entry on the first bar of the week. So even though, like for instance, right over here, we're looking at a 4-hour candle that actually does touch both moving averages and comes back down, I'm not going to enter on that one. To begin with, it's also the spread usually widens quite a bit for the first candle, first hour and a half or so of the new week beginning. Now, I also close usually prior to the last 4-hour candle of the week, like right here. In this case, I would have been in a trade, this one going up, and as you can see it, well anyways, these numbers here, let me talk about those in a second. Also want to mention down here, news is basically ignored. The reason for that is because some of my profit is dependent upon getting into a trade that has some momentum. That's what I'm hoping for, is some good momentum. Like for instance, right here, I'm sure right around this area was maybe some news coming out, and price came down and spiked right here to this level. So there was some good profit to be made there. In this case, about 49 pips. So that's it basically. Now, how do I enter these? All right, it is dependent upon price moving. And by the way, I also picked this area, this general area, to show what a real busy area looks like when there can be a lot of losses as well as some wins. So it's not always going to be beautiful runs. Those are nice, but I think we know that doesn't happen. So, okay, let's get to a basic entry. I'm looking for a move at least, or approximately, since it's dollar CAD and the spread is usually less than $2. I mean, excuse me, $2, 2 pips. So I'm looking at an entry right around 14 pips, or maybe 12 pips plus the spread, 12 and a half plus the spread, something like that, above or below the highest or the lowest moving average. On this trade right here, price moves up. Let's see, it only moved up to, well, it did move up to the 14 right about there. So actually I would have got in somewhere around the top of this candle, and then price goes up to about plus 10, 10, 11 maybe. I measured it slightly different. But in this case, I marked it at, it went up 11 pips, and then the second number would be the end result of the trade. In this case, the loss was 21 out. And that way I don't get sucked into any trades where I have these huge stop losses. Now, let me also mention that this works great on the dollar CAD, and also it works good on the euro dollar. I haven't really tested anything else out. Number one, I'm trying to stay with smaller spread stuff. I'm also trying to stay with generally lower volatility. So I haven't even looked at any pound pairs because they can just go wacko crazy up and down. So not interested in that. And now how do I take profit? Okay, so let's look over here. I have just went right past it. I have a Fibonacci that I use, that I have set up for that. And the Fibonacci uses obviously Fibonacci numbers. Now the way, okay, that was kind of silly, huh? The way that I draw it from the origin of the trend line, not the trend line, but the moving average. From the origin of the moving average to the highest point on the most recent bar. Okay. Then, depending on the distance, on a pullback, I would get out. In this case, the price went a total of about 112 pips, roughly from here up to here. It was about 112. So from that I subtract 14, which gives me 98, this number here on the left. And then from that I subtract the distance to my my pullback maximum that I will accept on this size trade, which is the 25% of the Fibonacci. So I realize that's not an actual Fibonacci number according to everything I've read and probably you've read too, but I just had to have something that was a line in the sand that did not take away too much of the gain on the bigger moves. Okay, I hope that makes sense. Now, excuse me, I had another peak right down here at this high. Okay, and let me see if I can get this to shows that just after looking at lots and lots of charts and seeing what was happening. So I have these numbers figured out that as far as the maximum amount of profit before and how much they have to pull back before I would let the trade stop out, or have even lower pullback threshold. For instance, if let's say if this, oops, move this out of the way. Let's say if this this one over here, okay, we'll stake this one right over here. Let's say it goes up, not a good one. Okay, I'm trying to just find something here. Okay, well let me do this so it's a little bit easier to see then too. All right. So since I'm recording, this doesn't exactly move the way I like it to. Okay, so anyways, let's say this distance from the top to the bottom here is only 52 pips. On a 52, my pullback threshold would be 50 and above, 50 to 60. My threshold pullback would be the 62% retracement right down here. So in other words, it could go up to 52 and it'd have to pull back clear to here before I would get out. And the reason I have these different pullback thresholds is simply because if price is going to move just a little bit and then pull back to the average, pull back to the moving averages, then I don't, I just want to get something out of it or break even or whatever. But the further it moves up, it could be more likely that it's going to continue to travel further. And if it continues to travel further, then I want to get as much of that piece of the pie as I can. So That's why at 50 pips up, I'm going to get out. It has to retrace a full 62% to get out. At 60 pips up, it only has to retrace 40%, which still gives it a good margin of pullback. And then at 70 and above, my pullback threshold is 25%. If that's not clear, just ask some questions. But remember, the base of it is right down here. The base of the Fibonacci that I draw is right at the base of the moving averages. Now, the other thing that I do is I add a trailing stop. So as I mentioned, my stop losses are 21 pips, okay? They're right here, 21 pips. But I have a trailing stop of 35. So why do I use a trailing stop as well as a hard stop? Well, a lot of trades on these less active pairs look to me, I could be totally wrong, but they look to me like they move maybe 35 pips in one direction before they change direction. In that case, I want to not end up in a trade that is going to just come back and stop me out at a full stop. I mean, that seems to be a pretty general cycle for both the euro dollar and the dollar CAD. So, I may be wrong, I may be right, don't know. But here's what happens then is if I'm trailing, okay, like you see this one right here, it traveled 21 pips. So the 21 pips, that's pulled the moving average up. This could be an error here. It's pulled the moving average up to, okay, the stop. Anyways, it pulls the stop up so I don't end up with a full 21 pip stop. I'm sorry, I just can't sit here and do the math right now. So as it comes up, it's trailing by 35. So once I would reach 35 pips in profit, I'm at break even. And at that point, my stop loss remains at break even. And then the next thing that kicks in would be plus 50 or higher, plus 60, plus 70, etc. So that's what I'm doing here. Now, how does this work out over the long run? Well, in the year 2016, here's what happened. Okay, you should be able to see this. Now, this is not a spreadsheet, this is a database. Okay, I prefer databases, and I spent a lot of money years ago learning them, so I like the functionality of them. At any rate, there was 140 trades during the calendar year of 2017 on the dollar CAD 4 hour. And my total, forget this total over here for right now, my total was right here for the year, 2352, so nearly 200 pips per month. Okay. Now this is all the trades up here. The maximum travel average was 47. The average level at take profit was 17. And then this is winners and losers. And sorry about that. Okay. So at any rate, the last two, okay, this number here, the 80, and this number here, the 3119, just kind of disregard those. That's something else that I'm not talking about here. So what I do anyways, let's see on the pluses how many of these were winners. Okay, I'm waiting for the computer to catch up. Okay, greater than 0. Remember, there was 140 possible trades. 72 of them were winners. Winners meaning more than 1 pip. Okay, and the average of these winners in this case was 48. The average win is 48 pips. Okay, so, and if you remember my stop loss, excuse me, I had 68, obviously, that lost, but my stop loss is minus 21, and so that straight away, particularly since I had more winners, shows you that you're going to win overall trading a method like this or similar to it. And in fact, let's just let's go to here. Okay, come on, computer, catch up. All right, and let's find the. Oh, jeez. Sorry, screwed up there. All right. All right, so let's find the losers and how they worked out. Okay, less than 0. Remember, there should be 68 of these. Okay, right over here, so 68. And the average loss was 17 pips. So the average loss, 17, average win, 48. So there's a difference there of 31 pips. And that's how you win, I reckon. Anyways, let me show you now. Sometimes on this, you'll see big runs like this right here, okay? And in this case, trading this way, you're going to miss a lion's share of a move like this. The good news is you're still going to make good money. The bad news is you're going to miss out on a whole bunch more money. But that's kind of the nature of the game, at least at this point, that I've been able to figure out. If you can figure out something better than that or different than that, I'll be all ears, believe me. However, that's how it can work out. Now, another thing to consider here is when you have charts that look like this. Now, this happens to be about almost a full month from October 26th to September 16th, 2015. And there's a total, I think, of 35 trades right in here. And as you can tell, price really had no direction. It was going back and forth, back and forth, back and forth. So you can get really chopped up in this. However, if you note down here, I noted how this worked out. The total for this was plus 380 pips, and the minus side was minus 344. So even though this is an area where you could, trading almost anyway, get your butt kicked, it actually ended up being positive 36 pips for this whole thing right here. So in closing, I'd just like to say that if you can think of some way to catch these longer runs, then that would be terrific. Some of the things I've looked at is like keeping the longer runs going by maybe taking half off or some silly thing like that. And I have been looking at that, and quite honestly, folks, it just does not pencil out the way that I've been approaching it. And besides that, I learned a while back that removing half of a trade to get some profit out of it, it just really doesn't work out, because it's either going to come back and stop you out at whatever point you have your stop set, Or it's going to continue on and make 4 times as much, like in this case, but only half the profit, which you need you need a much higher winning uh, record in order to catch those. And still, then how do you call quits on something that's moving up like this and does have some pullbacks? So that's kind of the whole game right here. Now, if we can add this to Gold to Huns random walk and figure out some way to add these in to his or add his to this. For instance, let's see here. For instance, let's see, let me just pull his page over here. This was his first chart that he showed on page 1. And you go from the Fibonacci points. It appears the 78, I believe, and then you would head down. Well, somebody asked in the thread here, what about continuing on? I mean, absolutely. If you're going to continue on from there, if you think it's a really strong move, you can then just continue on. And then perhaps one of the things you could use is just another support or resistance line, as indicated by this indicator. I believe this blue line is a weekly line. Or you can also perhaps use one of the percentage lines up here, and then from that draw yourself another fib to your as you follow price down, and then set a parameter for the maximum amount of return before you would get out of that trade. Quite possibly you could end up making a bunch more. You wouldn't want to set it too far away because you also don't want to lose much of that trade. But here with the Gold to Huns, we have a good margin to work with. So say, for instance, if we were to get in at the 78, our stop is only 22% of this level, and then say it goes down and hits our target at 0, hits our target at 0, then we can maybe then move the stop down to, say, 23%. And that way we're still making 25%, about a little over half of what the stop was. Something like that. I'm not going to do the math right now. I can't figure it out. But anyways, put some of these ideas in your craw. Think about it. And I hope you end up posting it here. I'll be happy to watch and hope this helps. This is Daryl signing off.